Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is January the 4th, 2013. It is Friday, so as we do every Friday, we're going over all the major markets that we track for you at PerfectStockAlert.com, 19 major markets. And so that you guys know everything that I know moving into the week ahead. So let's get started. Looking at Australia's market, the AORD to start off with, this one has been in a massive run to the upside here, and we have not been participating here. We took advantage of this move here, and then this move we attempted to trade, and it stopped us out, and we never got a good long opportunity in this since then, not a good pullback and everything. And right now, I wouldn't be looking to buy at this point either. Longer term chart shows you're reaching up towards an upper resistance line there, so I want to leave that alone. You also want to point out high point here on the ultimate oscillator corresponding with this current level here, and then the current place here. You can see it's lower, and yet the price is higher. So what we have here is a downtrend line here, an uptrend line here. This is basically telling you that you're overextending to the upside and look for a pullback. That pullback would, of course, be a buying opportunity, and I would look for that, the best opportunity to be off of this previous resistance line here, because once you're breaking out above the resistance line, it starts to act as support, so a pullback there would make a lot of sense, and then I'd be looking for a buy opportunity because we wouldn't test that high again, and quite possible could take it out. We'll have to wait and see at that point. The Dow Jones Industrial Average continued to move higher today, closing higher than we'd seen 2 days ago on this 308-point day here, so we're actually closing higher than that now. We talked about this before. We're in an uptrend. This is something you want to hold on to. Don't be advancing your stop too tight. We're talking about if you are long this, you don't want to necessarily put your stop here because you can easily dip down here and be a great buying opportunity before she eventually goes higher anyway. Remember, we're looking to take out this high point here, and that's an important factor. You'll see a lot of charts have already done that. This one's lagging, but it's still a great buy opportunity. Looking now at the French CAC 40 index, this is one that you want to wait for a pullback on as well. It started to get a little bit of a pullback right here, just on the fiscal cliff news that was going on in the U.S. Didn't get enough of it to give me a good quality signal, a nice hammer candle formation, something of that nature, so I didn't get involved. And we're just watching this continue to move to the upside. Again, just wait for the right setups. If you don't have the right setup, you're chasing, and that's a problem. In this scenario, whenever you're looking at a chart, you always want to look at previous high point being taken out. You've got new highs, you've got higher highs, higher lows. That means you're in an uptrend. You want to be looking for pullbacks to give you entry opportunities. Looking now at the MIB, the Milan Index, you can see clearly defined uptrend, higher highs, higher lows. The only thing you want to do is look at it and wait for a nice pullback to give you an entry opportunity on the long side. Be looking for that. I don't really care what kind of news the market throws at you to give it to you. You will have to test the previous high, even if you think this is the ultimate high. If you were to pull back from there, you still have to test it. That means if you pull back, you form a hammer, I'm going to turn around and be a buyer. And again, note previous high points are going to be acting as resistance until they're broken out. Once you close above them, they start to act as support. So the next pullback would be giving you find support at the previous resistance line. So expect that to happen, and you would also be filling a gap at this point here as well. So eventually this move here will tire and pull back. I also want to point out you basically have the same thing if you look at the high point here on the ultimate oscillator, and then the lower high you have forming here that's telling you that you're overshooting to the upside. You're getting decreased momentum to the upside, so it's not going to be sustainable. You will get a pullback. We'll take advantage of that when it comes. The German DAX composite is basically the same overall story we're going to see across Europe. You're going to see the previous high points have broken out, so they're now going to be acting as support, a little support zone there. And you'll notice that we have a nice move to the upside here. Wait for that pullback. Get a nice pullback, quality pullback, and then look for a hammer candlestick formation, and then we'll take advantage of that as a good buy opportunity. Right now, just leave it alone. Gold has continued its downtrend. As we mentioned last week, we told you this was this little bearish flag formation here, and overall downtrend would still continue. It did bounce to the upside, and then it quickly moved lower. So again, I'm glad we didn't attempt to trade that on the long side. We don't see a bottom here right now, so let it continue to fall. Eventually, you will see a bottom because it will start to change from what it's doing right now with lower highs and lower lows, to then it will change to making higher highs. But don't get bullish because you have an up day. Somebody asked me that, I think it was earlier this week, that they'd seen a day to the upside, and they were like, oh, does this make it something you're interested in? Why would I be interested in that on the long side because we have a single day to the upside? Did it take out the previous high? No. Then if it's still making lower highs, then it's really just still a downtrend, and right to that point, you're still just trying to catch a falling knife, which is really difficult to do even if you're me. So it's best just to wait for the actual trend to reverse. Right now, if you were to see something like this happen and then take out that high, great. The next pullback would be the buying opportunity, because at that point you would have high point here, higher high here, low point here, higher low following. The Hong Kong Hang Seng Index has been in a massive tear to the upside, and we just really haven't been able to take advantage of it. Different reasons, different situations, but right now the best thing I can tell you to do is wait for another quality entry opportunity. I believe one is forming here. You had one back here. You had a nice move going here and a pullback, and then a higher high here. Same time period we noted you had a bearish divergence scenario here. We could have actually shorted it on this day, but we just didn't. And then again, she got a nice pullback. After that pullback, you pull back to the 50-period moving average. That's where you want to be looking for good quality entry points on the bullish perspective. Look for a hammer candlestick formation, much like this or this. Look for confirmation the following day. You could have taken that as a buy opportunity. Now we'll be looking at the same scenario. You've had a nice advance to the upside here, overextended substantially to the upside here, about 85 level before you peak down, starting to roll over here. Great, let that happen. You pull back here on price activity, and then you might see another attempt to move here, and then a lower high here would give you the same scenario we had before, the bearish divergence before, and bigger pullback. So look for that. Looking now at the BSE, or the India Bombay Stock Exchange, again, this chart doesn't interest me on the long side at this point in time. I want to see a better entry opportunity, something that's clear, defined, and less disgusting, in my opinion. This one's just been a heck of a chart to trade. You've had lower lows, and then higher highs, and then really a sloppy consolidation pattern. Gaps here, very large gaps formed between this close and then the following low point there. I'd like to see this pull back before I considered it, and even then, I'm not really all that fond of it. Basically, when looking at this chart, I see this high point here, corresponding with this time period, and then this lower high here is downtrending move here, and then this uptrending move here tells me it's bearish divergence and likely to fall apart. It's an overshoot to the upside. So wait for that to pull back, get a good quality signal, then I'll take advantage of it right now and just watch it. Looking now at Japan iShares, you can see the EWJ here has made a nice move. I actually called the peak at 10. That was the target. It hit 9.99. I don't know if you guys are going to consider that a good call or a bad call. I missed it by a penny. That's the best I can do. And when we get a pullback here, you could actually see some buying activity pulling back here because you have this previous little support here, this little zone of support. This is something that you can draw like that. And I don't think you got a lot more downside here, and the longer term chart shows more upside as well. So if I were to form a hammer candlestick, if we were to see a hammer candlestick formation form here, really nice one, I might set it up as another entry opportunity there. So that's something you may be looking at trading here. But I want to point out, again, this downward slope does concern me. At the same time period, we had this upward slope here, so this pullback is not a really big surprise to me. However, I don't see a lot of downside potential in this particular chart right now. I think you got to find support at the previous support zone, and that's not very far from where you're at right now. Looking now at the FTSE, or the London Financial Times Index, this one I basically lost an opportunity to make money on because I was trying to be cute and smart and stupid. Basically, I was talking last week about, because we were in this tight consolidation pattern right here, and we weren't actually doing any major selling right here, and you notice previous resistance points are now acting as basically support. What we're looking at here, we saw this little shooting star signal there, and I told you you could actually trade that on the sell side as well as the long side, just basically straddle it because of the fiscal cliff that we're having in the U.S. But the problem was that got resolved much faster than was anticipated there, and so the move to the downside was very short-lived before she reversed back in the other direction. So all I did was got stopped out of my long position, got stopped out of my short position, and the thing went higher like I said it was going to do anyway. Yippee-ki-yay, I missed it. Looking now at the NASDAQ, this is a position we're still long, and we don't recommend advancing the stop. The stop is still way down here. If you advance the stop to this point, or if you try to move it a little bit higher, you've been stopped out already. That's not what you want to do. You're interested in seeing this thing continue to move higher. Actually taking out this previous high here, so which would be following what you're seeing in many of the other charts I'll be showing you in a little bit. If you do get a pullback in here, this is going to be a buying opportunity. Again, and not a reason to be stopped out. It's something you want to take advantage of. Again, notice the previous little high points here are going to be acting as support zones, so you don't have a lot of downside potential there anyway, but a little gap fill could make sense here. So if we get another pullback, I'll mark the chart when I see another entry opportunity, but right now I want to hold on to this and let it continue to rise. Looking now at the XOI oil index, this is a good way of gauging how the market feels about the overall economy. You can see we are clearly in a very clearly defined uptrend, so look for the next pullback to be another buying opportunity. Looking now at the Power Shares DB US Dollar Index Bullish Fund, you can see we have taken out a previous high, and this high point here is taken out by this high point here, and that's important because you got a 22.05 beats a 22.03. and that's higher highs. However, you still have a scenario of lower lows, low point here, lower low here. So when you have lower lows and higher highs, what you actually have is a sideways moving market. So you can trade both sides, meaning that when you get up here and you hit a peak, if I get a nice shooting star signal at the gap fill area, so we could press a little bit higher here and then give a shooting star signal. If we get that, I'll take that as a short opportunity, see it pull back down here, then get out and look for maybe a potential long opportunity while the market's maybe peaking at that point in time. And then we're looking for the market sell-off to be putting a floor in the price of the dollar and so forth and so on. We'll get to that when it happens. But right now, I'm keeping an eye on this chart over the next week for a sell opportunity. The Russell 2000 Small Cap Index, very nice advance to the upside here, taking out previous highs over on this point here. The main thing I want to show you on this chart, and this is something you need to keep in mind, whenever you see the ultimate oscillator run up over the overbought condition above the 70 line right here, a lot of people just say, okay, sell it and be done with it. Well, that makes sense as long as you're in a downtrend, but when that changes, then you're going to start getting stopped out, and then you need to change your strategy from going short to going long because the trend has shifted. And whenever that happens, you'll get higher highs, higher lows, and then when you're doing that, if you want to know how strong that condition is, look at the ultimate oscillator. If you start finding your support at the ultimate oscillator at the 50 line, you're in a very, very bullish market, and that's important to keep in mind as well. The S&P 500 Large Cap Index, the same basic overall story. We're just in an uptrend, nice conditions here, higher highs, higher lows. There's nothing here that would indicate that you need to be calling a top here. Keep hearing people say it's the top because of this or because of that. As long as the chart, the price activity is still pressing higher highs and higher lows, and what you actually have is buy pressure stronger than sell pressure, and you don't have a top. When that stops happening, then you can call a top. Until then, just continue to trade the trend. Silver is basically the same overall story as gold. You want to be a buyer of this about as much as you want to go buy rabies. Okay, just leave it alone. It's in a downtrend. Don't mess with it. When it changes, you can consider it. And right now, just leave it alone. Looking now at the TSX chart, you can Toronto Stock Exchange. You can see we're still long this position here. Makes a lot of sense in this current situation. And again, you'll notice again hugging the upper ultimate oscillator line, about that 70 line. That's not indicating overbought, or sell. It's indicating that it's very strong momentum to the upside, and that's an important little piece of the puzzle for you. I expect this will continue to consolidate at this current level. Previous resistance points are now going to be acting as support because we've broken down above them. So look for that to just consolidate at this point. And right now we're starting to form a very wide, perhaps little bullish pennant formation there. Keep an eye on it. It can break it to the upside and continue to move higher. The VIX, or the Volatility Index, which runs the inverse of the S&P 500, has got itself setting up for a very nice trade. We brought this one to your attention yesterday. So like I said, we had on Thursday, I told you we had a weak hammer candlestick formation, and I would be a buyer if we took out that day's high by 1 penny intraday. That did not happen. We gapped down and continued to sell off, so continue to watch it. There's nothing saying you have to buy it. You have to wait for confirmation, then you get involved. Right now, continue to watch it. When you pull back a little bit lower and you get another hammer candlestick formation, take interest, because again, you've got this massive gap right here, and this is going to be filled, likely to happen with the news on the fiscal cliff as it starts to come closer to the time period. We might see some selling in the markets around that time period. I don't think the fiscal cliff is going to change anything. It'll just be more news that comes in and scares some people out before we move much higher, because again, we have fourth quarter earnings that are going to be moving the markets higher. Last but not least will be the EMW, the Wilshire 4500. This one's one we're still long. Loving the condition of the overall chart. You're very bullish condition going on here. You had this higher high, higher low, higher high, higher low, higher high. Just continue to watch this for opportunities to get long if you're not already there. Also note the strength of this condition. You are bouncing off the 50 line there. Very bullish market. And next pullback will be another buying opportunity. Quick little announcement for you guys on the portfolio section here. You can go there, check it out. I've adjusted that. It was set up showing an option trade, but it was a bit too confusing, and we got a lot of questions and people not understanding options at all. So I thought, would switch it and change it to a stock trade, and then people can understand a lot better. So there it is. Okay. Also, if you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Enjoy your weekend, be safe, and I will see you all in the next one.
Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.